Company research reports are professional analyses prepared by financial analysts to evaluate a company's financial performance, competitive position, valuation, and investment attractiveness. The program explains that research reports support investment decision-making by providing detailed assessments of business fundamentals, industry conditions, management quality, and future growth prospects. These reports are widely used by portfolio managers, institutional investors, and individual investors seeking informed opinions regarding securities. Research analysts combine quantitative financial analysis with qualitative evaluation to form investment recommendations such as buy, hold, or sell. High-quality research reports improve market efficiency by helping investors interpret complex information and make more rational capital allocation decisions within increasingly competitive financial markets. A typical company research report begins with an executive summary outlining the analyst's investment recommendation, target price, valuation conclusion, and major investment thesis. The executive summary highlights the most important factors influencing the analyst's opinion, such as expected earnings growth, competitive advantages, industry developments, or valuation discrepancies. The program emphasizes that research reports should present information clearly, objectively, and logically to support investment conclusions effectively. Analysts must communicate both opportunities and risks associated with the investment recommendation. A concise and well-structured summary allows investors to understand the key drivers behind the recommendation quickly while providing context for the more detailed analysis presented throughout the report. Financial statement analysis forms a central component of company research reports. Analysts examine income statements, balance sheets, cash flow statements, and related disclosures to evaluate profitability, liquidity, solvency, and earnings quality. Ratio analysis, trend analysis, and common-size financial statements help identify operational strengths and potential warning signs. Analysts also evaluate revenue growth, margin trends, working capital management, leverage levels, and cash flow generation to assess the company's financial health and sustainability. The program explains that analysts often compare financial metrics with industry peers and historical performance to identify relative strengths and weaknesses. Thorough financial analysis improves forecasting accuracy and supports more reliable valuation conclusions within the research process. Industry and competitive analysis are equally important because company performance depends heavily on broader market conditions and competitive positioning. Research reports typically evaluate industry structure, market growth potential, regulatory conditions, technological developments, and major competitors. Analysts assess factors such as barriers to entry, pricing power, customer concentration, and operational efficiency to determine whether the company possesses sustainable competitive advantages. The program emphasizes that understanding industry dynamics helps analysts forecast future profitability and identify long-term growth opportunities or risks. A strong company operating in a declining industry may face significant challenges despite current financial strength, while companies with strong strategic positioning may benefit from favorable long-term industry trends. Valuation analysis is another critical component of company research reports. Analysts use valuation methods such as discounted cash flow analysis, comparable company multiples, dividend discount models, and asset-based approaches to estimate intrinsic value. These methods help determine whether a security is undervalued, fairly valued, or overvalued relative to market price. The program explains that valuation requires assumptions regarding future cash flows, growth rates, discount rates, and market conditions. Analysts must therefore justify assumptions carefully and consider sensitivity analysis to evaluate uncertainty. The final investment recommendation reflects both valuation results and broader assessments of financial strength, management quality, industry outlook, and risk exposure affecting expected future performance. Ethics and objectivity are essential in preparing company research reports because investors rely on analyst recommendations when making financial decisions. The program emphasizes that analysts must maintain independence, avoid conflicts of interest, and present fair and balanced analysis supported by reasonable assumptions and reliable information. Misleading recommendations or biased research can harm investors and reduce confidence in financial markets. Analysts therefore disclose important assumptions, risks, and potential conflicts transparently within research reports. A strong understanding of company research reporting improves investment analysis, communication skills, and professional judgment. By integrating financial analysis, industry research, valuation techniques, and ethical standards, analysts can provide valuable insight supporting informed investment and portfolio management decisions.